Zapper is this new tool that I use to check out all of my assets in DeFi. As you guys have known, DeFi has absolutely exploded recently, and so managing your assets is getting harder and harder because there's so many different places and so many different assets that it could be. So I'm going to put my Ethereum address in here, and Zapper is going to tell me where all of my assets are across Ethereum, right? So here are all of the assets in this wallet. There's a decent amount of them. And it's also going to tell me where I've deposited assets into various DeFi protocols, right? So there's some yield farming going on. There's some liquidity pooling going on. We can also look more granularly at the specific protocols that it's involved with in this Explore feature. So it's got some assets deposited into Uniswap. It's got some assets deposited into Balancer. And also with Zapper, you can just exchange straight from the Zapper interface, right? So this is just another layer on top of Uniswap or other exchanges on Ethereum that allow you to swap assets, right? So check them out at zapper.fi. It'll give you a nice clean portal to invest your assets in DeFi. And you can also connect multiple wallets if you use multiple wallets all at once, and it'll give you an aggregate of every single wallet that you own. Check them out at zapper.fi. Also, this is definitely not my wallet. Unstoppable Domains is helping the world become censorship resistant and permissionless. If you are looking for a censorship resistant website that no one can take down, go to unstoppabledomains.com and type in the domain that you think that you want. So I'm going to type in the domain that I think that I want, trustless state, and it's going to tell me some of the options that I can get to get a permissionless domain, trustlessstate.crypto. And so what you can do with trustlessstate.crypto or whatever domain that you want is you can purchase it, and then it can be a URL that you direct people to that no nation state can take down. That's what Unstoppable Domains is all about. What's also really helpful with Unstoppable Domains is that wallets can integrate unstoppable domains so that the addresses that you send your crypto assets to can become human readable. And this doesn't work for just Ethereum. You also can do this for Bitcoin or Litecoin or any blockchain at all, where wallets can resolve to your human readable name. So you can tell Bitcoiners to send you Bitcoin to trustlessstate.crypto or yournamehere.eth. Check them out at unstoppabledomain.com.
All right, guys, welcome back to State of the Nation. David, we've got to talk about some things that are driving. These are like drivers, maybe somewhat macro themes that are driving particularly crypto prices right now. And I want to bring up this Market Monday opening note that you put together on just yesterday.
The bank
and use that as a guide for talking about some of this stuff because I think it's super insightful. But you listed 6 different things that are driving crypto markets right now. Before we get into those, why is it important that we understand crypto prices? Isn't it just like a random walk through crypto, right? It's just whatever. It's all noise. Doesn't matter in the short run. It's all going to work itself out in the long run. Why do we need to know about these themes anyway?
Yeah, and your reference to the random walk is a good one. For those that don't know, the random walk is this kind of theorized model for how crypto prices move. And if you think of a really drunk individual who's like stumbling down the road, they stumble down the road, but they still follow the road, right? Like they go left and right across the road, but they still follow the road. And so understanding where this walk goes is really important because where it goes is relevant to our goals, relevant to our ethos, relevant to the Bankless nation, right? And so understanding the things that are impacting the price of Ether is something that impacts the Bankless nation, right? Fundamentally, we all are here because of things that are valuable, assets that are valuable, right? And so as the value changes, it's important to integrate that into your understanding.
All right, well, let's talk about some of those things that we think are affecting the random walk, and maybe it's not so random after all. And the first is this. This has been a theme of 2020, right? You know, people in the crypto community have been talking about, like the rampant inflation and money printing of the dollar ever since 2008. But like we are seeing it in overdrive in 2020. It's a part of our lives now. Like, bills are being voted on it. It's a constant discussion. Are we going to get another airdrop check, at least in the US? Other governments are similar. Can we talk about this first one, which is the new COVID relief package? So for folks that have been outside of US politics anyway, what is that and why is it important to the story here?
Yeah, this is the second COVID relief package with $1,200 in it for all Americans. This is something that a lot of people that if they were around now, they would have been Bitcoiners. But, 10, 20, 30 years ago, were maybe they're gold bugs or libertarians. People like Ron Paul said something like this was coming like forever ago. We're like, and Ron Paul said like, inflation is eating the middle class. And what has now with COVID is now we need inflation in order to survive, right? And so they are pumping dollars into the world in order to sustain, the unemployment and the lockdowns that we are able to have. So it's trying to balance out, making sure that people don't have to go out to go to work, and so they can stay home and be safe away from COVID, and also allow businesses to be afloat. But then it's also doing this through inflation, right? More or less at the end of the day, the value of the dollar is going to inflate when a bunch of dollars get injected into the world around us.
Yeah. So the big question is the $1,200 check is coming. It seems almost inevitable. But the big question is, where are people going to put that $1,200? I had a friend of mine who wasn't in crypto previous, but he got his $1,200 check and he just went wild. Like he just like, okay, now's my chance. It's money. This is evidence of the money printer. Maybe some of the crypto folks are right. And he just started investing in Bitcoin and Ether. And of course, I'm in this space, so that's the sort of thing. Like there's some selection bias here. That's the sort of thing I'm going to hear about. However, if you look at how crypto prices sort of responded post the first stimulus check, it's been pretty insightful, pretty phenomenal. Way above the S&P, at least for Ether and Bitcoin. Way above the price of gold. Of course, that could be other market cycles. So, the trend line isn't long enough to yeah, there's some noise here. But I guess the question to ask yourself is like, what are you going to do with your $1,200 check once it comes? If you have enough disposable income to meet your needs, are you going to put it in stocks? Are you going to put it in real estate? What's the store value? Are you going to put it in crypto? Right. And that's why I think we're seeing this graph respond in that way.
And keeping on this graph, maybe it kind of doesn't fit in the narrative that gold is underperforming versus the S&P, but you can even pull apart some of the companies in the S&P, typically the tech stocks from the rest of the S&P. And the reason why we would want to separate the tech stocks is they are absolutely dominating the S&P. And so they basically are the S&P. And the reason why tech stocks have done so well is they typically don't have any debt. They actually have the opposite. They have a lot of cash on hand. And what's really going on is companies that have liabilities aren't doing so hot, and companies that have assets are doing hot. And so, I bet you if we were to separate the S&P line into companies that don't have liabilities and companies that do, gold would be doing better than the companies that do have liabilities and worse than companies that don't have liabilities. It's all about having cash, all about staying solvent in this market.
Yeah, tech companies too. I think everyone is seeing this move to digital. I mean, I'm doing more and more on screens and less in the real world as a result of COVID. And I think some of those practices are going to be sticky. So some of the telecommuting software we use, some of the remote software we use is going to continue in the future. Everything is becoming more digital, hence tech stocks. Interesting to observe, but it looks like the check is going to land. We're going to have money printer go burr. We're going to have some helicopter money dropped on us at some point soon.
Also,
the second thing you mentioned,
to add on a small little tidbit onto the end of that, because it's not something I knew at the time, but China is also doing an airdrop in their central bank digital currency to their citizens. So this is not the only game being played.
Not to be outdone, but China wants to print some money too. All right. Election uncertainty. So this is again a little US centric, but I think it has ramifications across the world. I'm sure a lot of folks know what's going on, but what's your hot take on that and how that leads to market uncertainty?
Yeah, there's two things here. First off, we don't know who's going to win the election, and so there's uncertainty around that, right? And there's also uncertainty as to how one of these parties is posturing about how they are going to accept or not accept the election results. And the mere possibility of somebody not accepting the results of election is also makes the markets very uncertain, right? Like that is a very uncharted waters for the whole entire country. And so therefore it's going to be uncharted waters for the market to learn how to deal with that, right? And in the backdrop of this, we just have civil unrest from the polarization between these two parties, which kind of just amplifies uncertainty, right? Like you take uncertainty and then you add civil unrest on top of it, you just get even worse uncertainty. On the flip side of things, however, both parties seem to be posturing and wanting to like get into the party that is giving out relief, right? Like both parties want to be known as the party that got checks into the hands of Americans, right? And you know, the Democrats, famously, the more pro-worker party, really just wants to give out more money than the Republicans. But interesting, the Republicans aren't the no party. They aren't the no, we're not giving any money party. They are the party of we're just going to give a little bit less, right? And so both parties are being the parties of relief. So kind of if you believe the part number one, where as money gets injected, assets, especially crypto assets, go up, both parties seem to be posturing for we're going to print more money. So that's interesting.
Yeah, it does seem like both parties have a modern monetary theory agenda. No matter who wins, that's going to be the long-term trend. But in the short run, we've got this election uncertainty that we're dealing with that could cause markets to dip. So if we're looking like short, medium term, right? You've got money printer go burr, which is maybe pro crypto, possibly. But then you have election uncertainty, which is like uncertainty. Everyone goes to things like dollars, cash, right? Yeah. In that case, cash money, just want to make sure I have enough money to pay my rent and that sort of thing. All right, let's talk about a third thing you list, which is this BitMEX incident. We've talked about it with Jake on State of the Nation last week, but despite BitMEX falling, you know, one of the largest crypto derivative banks, Bitcoin Bank primarily, Bitcoin is still alive. Right. It's like, you know, taking a hit, but it's doing okay.
Yeah, so on the BitMEX news, the BTC and the rest of crypto price just plummeted, right? Because that's bad. A lot of volume and a lot of exchange activity happens on BitMEX. But I think over the long term, this is going to be extremely bullish, because if we want more and more of the world's capital to have a reasonable chance of getting into crypto, then we need to have legitimacy in this space, right? Like the legitimacy of the cryptocurrency industry is much better of an asset to have than BitMEX, the exchange. And so I'm totally a fan of throwing BitMEX overboard in for favor of more legitimacy. And what's also interesting is that the market, it didn't crash, it dipped at the news of BitMEX, but then it just resurged and it rebounded even harder, right? And so in bull markets, we shed bad news, and with good news, we moon, right? And so that's kind of what I see happening.
I like that you use that word legitimacy, because obviously the government's way to get legitimacy in the market and trust in the market is through regulation, right? So I do think trust in our institutions in general is at all-time lows, but the CFTC solution for that is basically, hey, we need to regulate, we need to be watchdogs on the industry. But legitimacy is a neutral word, and so is trust. The other way we can gain that trust in the derivatives market is actually through transparent DeFi, right? So if you're using a transparent smart contract driven derivatives platform, maybe something more along the lines of DYDX, or even in the future, synthetics, everything's on chain, everything is auditable. You don't have to trust Arthur Hayes with your funds, right? That's another level of legitimacy, I think. And I do think all of this is bullish for DeFi. So does Robert Leshner. Hold on to your butts, he says in his tweets.
Well, I think that's a Bart Simpson quote, actually. I'm not sure if that was intended or not.
Nice. All right. So the fourth thing is public companies loving Bitcoin. Right. Super interesting. So, but somebody asked me on Twitter, is this bullish for Ethereum? So or Ether? I guess there's maybe two questions there. So tell us about public companies loving Bitcoin. And it seems obviously bullish for Bitcoin. Is it also bullish for Ether?
Yeah, sure. So this is the second public company to add Bitcoin to its balance sheets in the very short time frame, like maybe 6 weeks, right? And the first one was MicroStrategy, which, at the end of the day, MicroStrategy is really just this one guy who seems a little bit impulsive and seemed to just market buy a bunch of Bitcoin and put it on his company's balance sheet. The second is Square, led by Jack Dorsey, who is, you might even call him a Bitcoin maximalist, definitely pro Bitcoin, doesn't believe believe in other tokens, doesn't necessarily believe in Ethereum. And so we have two companies that with Bitcoin on the balance sheet. And this is a big signal to other companies that the Bitcoin scarcity game is being played, right? Like you guys, I hope you guys all read the article that we put out on Bankless called Bitcoin Scarcity Game. It talks about how like the choice to not buy Bitcoin is a choice, right? And so, you know, if companies aren't thinking about putting Bitcoin on their balance sheet, they're going to lose out to companies that are thinking about it, right? So very fundamental to the value proposition of Bitcoin. And we see this scarcity game playing out on larger and larger scales. Like first off, it is played off by individuals who, you know, spin up their CPU on their laptop to mine Bitcoin in 2009, 2010, and then they, you know, mine it more because they want more Bitcoins, right? And then it, you know, people start to buy it, and then, you know, companies start to build around it, and then it just scales and scales and scales up, and now we're at the point of public companies. It's public companies' turn to play the game of musical chairs with Bitcoin, right? And that's what I see currently being played. And that's just tailwinds for the narrative of Bitcoin. Is this bullish for Ether and Ethereum? You know, I see a lot of Bitcoiners tease me saying like, you know, nowhere did Michael Saylor of MicroStrategy or Jack Dorsey put Ether on their balance sheets. And so like, no, this is super bearish for Ether. Like they don't even understand what Ether is. But I would remind them that every time that Bitcoin moves upwards, Ether tends to move upwards even more, right? Just because of the nature of the market caps. Like Bitcoin is, I don't know what the market cap of Bitcoin is, like 300 billion right now versus Ether's like 40 billion. If Bitcoin doubles, Ether's historically more than doubles, right? And so it tends to be a leveraged play along Bitcoin. So, you know, Bitcoin success is Ethereum success. Because, you know, if people put Bitcoin on their balance sheets, they're also going to think like, okay, what else can we put on our balance sheets? Especially after it moons, right? They're going to ride that train.
Yeah, I totally agree. I do think probably 80%, maybe more of the people who are into the space, myself included, probably you included, like we learned about digital scarcity through Bitcoin and Bitcoin scarcity game. Like that was the gateway for me anyway, to Ethereum and to DeFi and to open finance in general. So it, you know, Bitcoin is 10 years old. Ethereum is 5 years old. I think Bitcoin will continue to be the gateway to other interesting crypto projects like Ethereum. So probably good for both. I agree.
The Bankless State of the Nations are brought to you by YEARN. YEARN is DeFi's first self-building community-run project, which I just get really, really excited about. YEARN is a system that seeks out yield in DeFi, and it does that in a number of different ways. A very aggressive way is with the vaults, where you can deposit your preferred asset of choice, and different DeFi experts will come in and generate a strategy for what to do with your deposited token, right? And so it'll go find ways to get yield in that deposited token in DeFi. For those who want to just earn yield on their stablecoins, the Earn system is for you, where you can deposit your preferred stablecoin, and YEARN will go and figure out which money market on DeFi in DeFi is producing the best interest rate, whether it's DYDX, it's Compound, or Aave. It looks around DeFi to see where the yield is coming from, and it directs stablecoins automatically so you don't have to. Check them out at yearn.finance to get started, and also check out the stats page to see what other people are doing as well. We're also brought to you by MONOLITH. MONOLITH is your cool new DeFi account, your DeFi savings account, your DeFi checking account. Except the cool thing about the MONOLITH DeFi account is that it gets software updates, right? You actually get to increase the usefulness of this over time. So here are some of the features. MONOLITH is a smart contract wallet with a lot of the features that you would expect if you've come to know DeFi and what it is. You can add money to it. You can put that money to work in Compound and accessing yield. But you can also swap through Uniswap. What was cool with MONOLITH is that they will send you a very sexy MONOLITH Visa card that connects to your MONOLITH smart contract wallet on Ethereum. So it's a really awesome tool to live a bankless life with a savings account that gets software updates. So this is something that you're never going to find out in the real world, but you can still do real world things with, you know, real money, like buy your groceries. So that's just fantastic. Coming soon to MONOLITH, actually already here to MONOLITH, is now you can buy DAI and get it sent to your wallet directly, right? So it's also being an on-ramp. So you don't have to go through your centralized exchange like Coinbase or Gemini or wherever. You can just go straight from your bank account right into your MONOLITH checking account smart contract wallet. So check them out at monolith.xyz.
All right, this thing is unsettling, David. Bitcoin and ETH have this correlation with the S&P 500 that it can't seem to shake, right? So I guess this is part of the first theme that we were talking about, where money printer goes burr and then stock prices go up, right? As long as people are like, they do an initial flight to safety. So they'll go to US dollars for a bit, and then they're like, okay, the world's not collapsing and the Fed will continue to print money. So they don't want their money in dollars. They want their money in store of value assets like stocks. And crypto, but Ether and Bitcoin have both exhibited this strong correlation with the S&P. It almost feels like we're playing in crypto with a leveraged stock game, like a leveraged S&P game. What's your take on that?
Yeah, this is like, I said this in the article. This is my least favorite thing about crypto at this present moment. Like, I signed up for the uncorrelated industry, right? I signed up for a nation that doesn't exist in the real world. Like, but all of a sudden, like, we're correlated to the S&P stock market, right? Which means that we are therefore correlated to a COVID third wave, right? We are correlated to another round of shutdowns. We are, correlated to civil unrest, right? We are correlated to anything bad that happens in the world is going to happen also to crypto. And this has been more or less been true since, the early March dump, Black Tuesday or whatever. We've been correlated for a while. And I think part of, why there's so many different market factors right now is kind of creating that, we're not correlated to the S&P. We're all just kind of correlated to this same level of general uncertainty, right? And so we're also kind of all correlated to the money printer, which is also a good thing, right? Because if like a third wave happens, all the bad stuff in the world happens, well, then they're just going to turn on the money printer, and that's going to be bullish for Ether and Bitcoin again, right? And so I don't like it because I don't like being correlated to legacy. I do like it though, because then we have upside exposure to the money printer. And like, what is a better value proposition than being able to have upside exposure to something that prints money?
It does seem like it's an artifact of time horizon too, right? We are in this 9 to 12 month, maybe 18-month theme where we're correlated temporarily to the S&P, but like fundamentals suggest that that should not remain so in the future, right? So if you analyze why buy crypto, why buy Ether, why buy Bitcoin, you buy those assets for different reasons than you buy stock, right? So I do expect that that's just the kind of the medium term, short to medium term cycle that we're in, but I don't think it'll remain so. If we're right about digital nations and if we're right about crypto as an asset class, things should not stay correlated for the long run. But let's get to the fifth thing, and this could be a catalyst for that breaking of correlation, David, and that's ETH 2.0. So is it actually going to ship this time? Because I heard ETH 2 was never going to ship.
Dude, the funniest thing about the last bull market that we all went through is it was the tone of the bull market was like, yeah, this bull market is going to lead right into Ethereum 2.0 and we're all going to be staking.
Yeah.
And
2017, by the way, right?
2017, not this bull market, the last time. And that seems to be kind of the narrative that's playing out right now in this appreciation cycle. However, it seems to be a lot closer. I don't know, maybe that's what I said last time, but I do think that it is indeed right around the corner. And like you said, this is exactly the catalyst we would need to break that correlation, right? And also, first and foremost, it is possible to be upwardly correlated with something. And so while we are correlated, we are still correlated in an up and to the right trajectory. And I think that's what's going on with crypto. And I think things like Ethereum 2.0, where a lot of the value pillars of Ether, one which we just talked about with Tim Bieko with EIP 1559, but then also with staking, actually gets priced into Ether, right? And I said in this article, I actually don't think that the fact that you can stake Ether and receive rewards is going to be a great catalyst for Ether price appreciation, because I think the people that are going to stake Ether are going to be the people that don't really trade or sell Ether that much, have had Ether for a long time, and also are not participating in DeFi. And so I really think the Ether that's going to become staking first is going to be dormant Ether. Like we're talking about like Vitalik's Ether or the EF's Ether that has been slated for proof of stake since like 2015. When it was created.
How about your Ether?
I'll get there eventually, right? But
not necessarily off the bat.
I am not going to be the first through the door. No, sir. Somebody else. I will be following somebody else through the door first. Yes.
You don't want to lose your ETH on something like that. All right. So if somebody were to ask me in 2017, when is ETH2 coming? I probably would have said something like 2019. And that would have been totally faith-based. Would have been like based on my feeling, like we didn't have test nets or I didn't see a project plan, that sort of thing. I feel like we as a community have gotten a little smarter. But even if you asked me late 2019, when ETH2 would happen, I probably would have said late summer 2020. And now here we are, we're past summer 2020. And now what are we saying, David? We're saying like, it looks like it'll
Q4 or Q1. Mostly
right,
Q4
though.
though.
Q1. All right. So if you're saying Q4, why are you right this time?
Because that's what Danny Ryan said.
Okay.
So I'm blaming it on Danny Ryan if we're wrong.
It does feel like we've got test nets, we've got implementation plans, we've got actual developers who have the thing running. It does seem like Q4, Q1 is a much better bet than some of our previous predictions. But
there's a lot more evidence to back up the claim that we will begin staking very shortly.
Exactly. And there is a huge ETH2 will never ship crowd, right? That says basically the longer it delays, to this day, the longer it delays, the less likely it is to actually happen. And I think they're in for quite a surprise when that day does come and when ETH2 does ship.
That is the thing that I think will impact the Ether price. Not that there is actually going to be demand for Ether for staking, but just the change in the narrative, right? Like the change in what is true. Like all of the ETH2 will never ship crew, and that proof of work is here to stay crew, like all the and mainly the execution risk of Ethereum 2.0, right? Because if we get to phase 0, well then phase 1 and phase 2 aren't that far off, right? Like phase 2 is super far off if we never got to phase 0, but with phase 0 behind us, we can start having that compounding progress, right? And again, like one of the reasons why Ethereum quote unquote 2.0 has taken so long is we started building phase 0, 1, and 2 in parallel with each other, right? And so with phase 1 here, like it's not like, okay, now we can begin on phase 1, or when phase 0 is here, it's not like that's when we start work on phase 1. When phase 0 is here, we can start to implement phase 1. Right. And then once phase 1 is implemented, we can implement phase 2. Like a lot of this work has already happened. And so the ETH2 crew, the anti-ETH2 crew, I think is in for a big short squeeze, if you will.
Because I'm like more confident that ETH2 is actually like coming, right? I'm very confident that it's coming. It's well on its way. It's only a matter of time, probably months, maybe weeks. When we get Vitalik on the podcast next week, I think we can broaden the discussion, because whenever you get Vitalik on a podcast, it's kind of like you want to ask the question of like, yeah, but so when is it coming? Like when ETH2, Vitalik, right? Like, and this time I feel like in our podcast, we can go a bit deeper on not like when ETH2, but like why ETH2, right? Because this has been a long vision coming. Like what are the principles behind the design of ETH2 and what's important, right?
Because
so
crypto is
that'll
political.
Crypto is absolutely political. That's why, like, Brian Armstrong, his piece, just like, he was, and I get the sentiment. He put a blog post out that was like, hey, we're here for a different, like a business mission, right? Open finance kind of mission. And we're not here to talk politics. But at the same time, right, I get it's not left versus right politics,
right?
But crypto is absolutely political. Right. It is like absolutely an anti-authoritarian like movement, and that in itself is political. What if you get into a government, a state that says like, hey, it's illegal to own crypto, right? Well, then the act of owning crypto is very political in those cases. So I don't think we can escape that.
And also, therefore, some of the design decisions around ETH 2.0 become extremely relevant, especially with a top-down decision where like crypto's illegal. Well, whether we are staking like 32 ETH or 3,200 ETH is an important design implementation that impacts how the network can function under an adversarial environment such as that. And so that's kind of why we're getting Vitalik on, to go through some of the decisions which are therefore political decisions. I don't know if Vitalik would agree with that framing, but I think we'll ask him.
Or whether we can stake it on like a consumer laptop with a cell phone connection, or whether we have to stake it in a big data center. That's certainly another political consideration that feeds into the design. All right, David, this has been State of the Nation, man, but we've got one more thing to talk about, and that's our new episode, our new sort of mini show that we're coming out with on Friday. the roll-ups round out. So what is that? What's going to be the format for that?
Yeah, so Rollups Round is going to be where we go through the news, go through the events, and kind of go through some of the things that Ryan and I have on our mind. So it's going to be a very well packaged, very quick, 30 minutes, but with lots of topics, roll-ups of all the things that are relevant. And so we have, the price action market commentary kind of distilled what we just talked about, as well as product releases from the DeFi world, funding rounds, who's going to be hiring, any legal action that has been taken, milestones, who's hiring. And then we're going to go through a series of, what's on the news, what's in your mind, what are you looking forward to, right? So we are always taking suggestions. This is kind of where the Bankless Nation can ping me and Ryan saying, hey, will you include this in the next rollups round? That's what the rollups round is for. So this Thursday, we're going to be talking a lot about the Q3 token report, which is coming out tomorrow on Bankless. We're also going to be talking about the Department of Justice 83-page crypto framework and what that means for you.
Oh my God. I hope Jake put together a tweet summary for that.
Yeah, he did actually. He did.
Okay.
We're also going to talk about the Blue Kirby exit, which I think is a fun little sitcom episode of crypto and DeFi. And then we're also going to be talking about Tornado Cash because the Tornado Cash is picking up speed.
All right, awesome, man. That's going to be great. So what you need to do is hit subscribe to the YouTube channel to make sure you catch that. That'll be Friday mornings. We will also be pushing that out on the podcast. So if you're on the run and prefer the audio version of that, that will be there for you too. So this has been episode 18 of State of the Nation. We're 18 years old now. David, we can vote. So thanks for joining us. Risks and disclaimers. Of course, DeFi, ETH is risky. So is crypto. You could lose what you put in. EIP 1559 looks like it's coming. It may not come. Who knows? This is not financial advice, but we are headed west. This is the frontier. It's not for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.